Hello and welcome to the show. I'm Puneet Wadhwa and we have with us Ajit Mishra, Senior Vice President for Technical Research at Religare Broking with us today. Hello Ajit and welcome.
Thank you, Puneet. Thank you.
The markets have seen a good run in the last few weeks with the Sensex and Nifty hitting their respective 52-week high levels. So what is the road ahead? Is it time to book profit? And what are the key levels that you're watching out for on the Sensex and the Nifty?
Right. So, Puneet, it's almost like 7 months. It took us to reclaim the record highs and been a gradual move, across sectors, and especially, without much of the participation from the banking index. We feel still we have further room, but yes, the upside we might face, hurdle around the new milestone when it comes to the Nifty around 19,000, 90,100 level first, and then 19,400 mark, in the days to come. On the downside, I feel that's very important and critical for index to maintain 18,600. So off late also, in fact, when we were struggling around the record highs, Nifty managed to hold the short-term averages around 18,600, which is placed around 18,600 first, and then around 18,450. So these are broad levels when it comes to the Nifty, and upside 64,500 is going to be the first area of resistance when it comes to Sensex, and a decisive close would help the index to inch towards 65,850 maybe in a month or two.
Are there any large cap stocks, let's say from the Sensex or the Nifty pack that you like at the current levels, or probably where one can exit their positions?
So certainly, you see banking, auto, pharma, these are some of the sectors wherein we are seeing fresh traction, after 6-8 weeks of consolidation. So within the banking space, Axis, ICICI, HDFC Bank, these are some of the prominent name. From the auto space, M&M, Maruti, they look very strong. From the pharma space, Dr. Reddy, Divis, they are also positionally looking very attractive at current levels. At the same time, Coal India, Hindalco, ITC, UPL, Wipro. These are some of the names which one can avoid, or in fact, they can reduce their position, because we expect the underperformance to continue at least in the short to medium term point of view.
HDFC Bank has been in the news recently, Ajit, given the merger-related developments. How are you viewing this stock, and are there any specific levels that you'd like to share with us?
So yes, HDFC, Puneet, it's almost 2 years now that the stock has been consolidating, and off late, if you have noticed that the range was narrower, like 1550 to 1700, and finally we are expecting this consolidation to end. So with this news of merger, everything seems aligned. And as we have just discussed about ICICI, Axis, and SDFC are going to be the next trigger for the banking index to inch toward 45, 100, and maybe higher. So SDFC definitely one should look at even at the fresh level in case if the view is let's say short to medium term, and maybe close to around 2050, something that one can positionally look for as a positional target.
Mid and small caps too have had a fantastic run in the last few months, outperforming their larger cap peers. Can the rally sustain, and are there any mid and small cap names that you have on your radar at the current levels?
Yes, so the broader indices, in fact, we were seeing the outperformance from the last 8-9 weeks. The last week, it was a bit of a profit taking, but again, we are seeing this trend resuming. And mid cap index, it was almost like 1.5 year of consolidation that it made a new high prior to the index. And small cap, we still have a room, roughly around 10% away from the record highs. So we believe that this selective move will continue, but one needs to be cautious, because we are seeing some of the penny stocks also, and stocks which are completely down and out. They are also witnessing a bit of recovery. But we feel that one should stick with the promising name wherein the fundamentals are also in place. So within the mid cap space, Bharat Forge, Bata India, Godrej Property, L&T Finance, Prestige, Tata Chemical. These are some of the names which are positionally looking very upbeat, and at the same time, from the small cap basket, Amaraja Battery, Birla Soft, CDSL, Exide, and FSL. These are some of the names which one can look at.
So what's your view on the broad consumption theme, FMCG, consumer durables, discretionary spending, etc., now that the monsoon has picked up pace?
Certainly, but I feel that it's already priced in the kind of move that we've already seen in the FMCG basket, and the consumer durables, they are not participating yet, but we feel that one can be selective in this space, and stock like HUL, Dabur, Colgate, UBL, these are the names that one can look at. At the same time, Britannia, ITC, they look slightly stressed. So in case if you have an existing position, you may consider booking some profit at the current levels.
How should investors prepare for the upcoming June quarter result season as regards their overall market strategy is concerned?
We have reached to the record highs before the quarterly results, and we are still seeing mixed trend within the sector. So I feel that's more of like stock specific approach that one should look at. As like we were discussing about the IT pack, wherein we are seeing HCL Tech outperforming the other IT majors. We are seeing a similar kind of a trend in the banking space also, wherein Axis, ICICI, HDFC looking promising. While Kotak, is sitting on the sidelines. So I feel that's more of like a stock specific approach than one should, look at before the earning announcements.
Any disclosures on the stocks and sectors that we've discussed?
Yes. So as a disclosure, I'm personally not holding any stock, but our clients may have position.
Thank you, Ajit, for your time today. We hope to see you soon.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.